Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, March 28, 2025. Kicking things off, I'm Max Profit. Key indexes were all down this week. The Nasdaq Composite Index led losses, dropping 461.6 points to 17,322.99, a decline of 2.5%. The S&P 500 Index and Russell 2000 Index both showed strong negative trends, falling 1.5% and 1.6% respectively. Market breadth was notably weak across all indexes. The Nasdaq Composite showed the most severe disparity with 2,379 declining stocks versus just 794 advances. The Dow 30 recorded 26 declining components against only 4 advances. Weekly returns were negative across the board, with the Nasdaq Composite showing the largest decline at minus 2.59%. Month-to-date losses have been significant, with all major indexes down more than 5%, led by the Nasdaq's minus 8.09% return. Looking at longer-term performance, the Nasdaq Composite leads with a 10-year annual return rate of 13.47%. In contrast, the Russell 2000 has significantly underperformed with a 5.01% annual return over the same period.
Checking out best and worst performing equities, I'm Penny Stock. TransCode Therapeutics skyrocketed 1,650% to 0.49, showcasing strong upward volatility. Microalgo and Marblegate acquisition followed with gains of 588% and 245% respectively. Marblegate hit a new all-time high. Weekly returns were exceptional, with TransCode averaging a daily gain of 4.68%. Microalgo showed strong momentum with a weekly return of 588%. Marblegate continued its upward trend with positive returns across all timeframes. Looking at longer-term performance, TransCode and Microalgo show negative 3-year returns despite recent gains. Marblegate stands out with positive returns across all timeframes, including a 3-year annual rate of return of 59%. Among large caps, Berkley led with a 12.6% gain, hitting a new all-time high at 71.27. Dollar Tree and Universal Health Services followed with gains of 8.9% and 6.9% respectively. Berkley's weekly return of 12.7% stands out, with strong performance across all timeframes. Dollar Tree and Universal Health Services showed positive weekly momentum despite mixed year-to-date performance. In the 10-year view, Cintas leads with a 25.7% annual rate of return. Berkley shows consistent growth with a 16.9% 10-year annual return. Other stocks show mixed long-term performance. Aclarion led declines, plummeting 97.7% to 12.12. Wang and Li and TC Biopharm followed with drops of 94.9% and 80.9% respectively. All 3 stocks hit new all-time lows. Weekly losses were severe, with Aclarion averaging a daily decline of 26.8%. Wang and Li showed similar weakness with a 34.7% average daily drop. TC Biopharm extended its losing streak to 7 weeks. In worst-performing stocks this week, Aclarion led the decline, plummeting 97.7% to 12.12, setting a new all-time low. Wang and Li dropped 94.9% to 0.26, while TC Biopharm fell 80.9% to 0.31 after 7 consecutive down weeks. Among large caps, Supermicrocomputer led losses, dropping 18.7% to 34.26. Broadcom fell 11.7% to 169.12, while GE Vernova, Lululemon Athletica, and Las Vegas Sands all declined around 9%. Looking at recent performance, Super Microcomputer showed the steepest weekly decline at minus 18.7%, with an average daily drop of 4%. Broadcom saw a minus 11.7% weekly return, while year-to-date losses reached 27%. Long-term performance reveals Super Microcomputer down 66% over 1 year, despite strong 3-year returns of over 700%. Las Vegas Sands shows consistent weakness with negative returns across all time frames, including a 30% decline over 10 years.
And now onto U.S. sector performance. Consumer defensive leads the gainers, rising 1.6% to 878.40. Energy shows a strong upward trend after 3 consecutive weekly gains, while real estate drifts sideways. Consumer cyclical displays a strong negative trend despite a marginal gain. Market breadth reveals significant weakness across sectors. Consumer cyclical shows particularly bearish signals, with 407 declines versus 82 advances. Financial services see similar pressure, with 490 declining stocks against 125 advancing. Real estate's breadth is notably weak, with decliners outpacing advancers by more than 4-1. In short-term returns, consumer defensive leads with a 1.65% weekly gain. Consumer cyclical shows significant weakness with an 8.85% monthly decline. Energy demonstrates consistent strength, positive across all timeframes measured. Looking at long-term performance, consumer cyclical shows impressive 10-year returns of 102.5% annually. Financial services follows with 97.5% annual returns over the same period. Energy lags with more modest 10-year annual returns of 23.9%.
Consumer defensive stocks showed strength this week. Dollar Tree led the group with an 8.9% gain to 72.75, showing a mixed positive trend. J.M. Smucker rose 6% to 116.32 with some upward volatility. Mondelez International climbed 4.9% amid a positive trend. Looking at returns, Dollar Tree posted the strongest weekly gain at 8.9%, though it's down 2.9% year-to-date. J.M. Smucker and Mondelez International both show positive year-to-date returns of 5.6% and 13.4% respectively. In long-term performance, Mondelez International stands out with a 90% total return over 10 years, averaging 6.7% annually. Most other stocks in the group show negative long-term returns, with Dollar Tree down 54% over 3 years, averaging minus 22.9% annually.
The worst-performing sectors showed significant weakness. Technology and communication services both extended their losing streaks to 6 consecutive weeks, dropping 3.6% and 3.2% respectively. Healthcare exhibited a very strong negative trend, while basic materials marked its 4th straight weekly decline. Market breadth shows widespread weakness across these sectors. Technology saw just 132 advances versus 561 declines. Healthcare showed particularly weak breadth, with 261 advances against 815 declines. Basic materials had more than twice as many decliners as advancers. Year-to-date returns highlight the depth of the decline in technology, down 12.8%. Communication services has fallen 6.6% this year. Despite recent weakness, healthcare maintains a positive year-to-date return of 5.1%. Looking at longer-term performance, technology stands out with a 10-year annual return rate of 19.2%. Basic materials shows the weakest long-term performance with a 10-year annual return of just 5.8%. Healthcare has maintained a 7.2% annual return over the decade.
Technology stocks showing weakness include Supermicrocomputer, with the steepest decline of 18.7% to 34.26. Broadcom followed with an 11.7% drop to 169.12. Oracle, Trimble, and Western Digital all showed strong negative trends, with losses between 6.9% and 7.4%. Looking at month-to-date performance, Broadcom and Oracle both declined about 15%. Western Digital showed similar weakness, down nearly 17%. Supermicrocomputer had the largest monthly decline at 17.4%. The 10-year returns tell a different story, with Supermicrocomputer and Broadcom showing impressive annual rates of return at 26% and 29% respectively. Western Digital is the only stock showing a negative 10-year annual return at minus 5.3%.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.